Bloomberg Audio Studios. Podcasts, radio, news.
Welcome to the Merryn Talks Money Market Wrap, where we talk about the biggest moves in the markets this week and what is driving them. I'm Merryn Somerset Webb, editor-at-large for Bloomberg UK Wealth.
And I'm John Stepek, senior reporter at Bloomberg and author of the Money Distilled newsletter.
Award-winning.
Multi-award-winning.
Multi. Someone please give the podcast an award.
It's
Another
had an award.
Sorry.
It's had a few awards.
Please, someone give us an award so we can be multi-award winning, because being slightly underneath John's newsletter, it messes with my head a little. Anyway, it's been an exciting week, right, John?
Yep.
We've been able to put the budget behind us. No, we haven't. We can never put the budget behind us. But we're not going to talk about the budget. We're going to talk about the excitements in the investment trust industry, because we feel like we've participated in them just a little, don't we?
Yeah, I feel that we should mention this one because this is the collapse of the mega merger between HICL and TRIG. And obviously, regular podcast listeners will remember that we had Chris Clothier of Capital Gearing Asset Management on the other day, basically saying why the merger was a bad idea. And now it has basically fallen through due to pressure from shareholders, which would have included Christopher and his colleagues at CGAM. And yeah, to be honest, I mean, I think we would both agree that this was not really a great deal for shareholders, well, especially not HICL shareholders, and it's probably a good thing that it's gone by the wayside.
And it's interesting that, shareholders are getting involved and there's lots of activity in the sector, but shareholders are looking out for what's best for them, analysing these deals properly, and nothing is just going to be waved through.
Yeah, it's nice to see, isn't it? I mean, it is nice to see. I mean, you talk about shareholder democracy specifically a lot, and the investment trust area is one place where I think we have seen a great deal of it this year. Because obviously it started off with SABA, the US activist hedge fund, kind of requisitioning meetings at 7 different investment trusts and then losing the vote at all of them, but then also managing to make changes that arguably, certainly in some cases, were probably for the best. So, I mean, I think actually from that point of view, it has been a good year for investment trusts, particularly because the other issue is, I mean, the HICL and TRIG merger is indicative of too much bloat in the sector that came about arguably during the zero interest rate era. And although this wasn't the way to kind of go about fixing that, I mean, certainly most of the brokers think that it puts that sort of sector in play, as they say. So maybe someone else will come along and bid for TRIG, or someone else will come along and possibly even bid for HICL, depending on whether they, had been thinking about it due to this merger taking place. So I think it's pretty positive.
And what about the other big thing that happened this week, which is the proposed merger between Baillie Gifford US Growth and Edinburgh Worldwide Investment? So two Baillie Gifford trusts, and they proposed a merger, both being at reasonable discounts and with sort of similar things going on. And SABA has shares in those as well, and immediately said that they weren't mad for that.
Yeah, this is an interesting one because this is SABA sort of coming back to the headlines. Now with this one, I mean, because obviously Edinburgh Worldwide Investment Trust was one of the trusts they took a tilt at the start of the year. Basically, they've come back. This is a kind of tricky one because SABA owns about 30%, or certainly has stakes worth 30% in each of these trusts. Clearly is quite keen to get hold of them. I think probably one of the most interesting things about the trusts is they both hold quite decent stakes in SpaceX, which obviously Elon Musk's big satellite company. It's one of the few private companies that people probably value it more highly than its paper nav would be, because everyone's so excited about it. So I can't help but think that this is the prize for SABA. And the difficulty then is, is any of this best for the other shareholders? And obviously, I mean, it's up to the other shareholders to vote on that, because SABA's now requisitioned the general meeting to oust the current board of EWI and replace it. Now, I'm wondering why this will go any differently to the previous kind of vote, but then again, SABA owns more of EWI now than it used to.
And it's nearly Christmas. Everyone's a little distracted.
Yeah, that too. So we'll just need to see what happens.
This is one to keep an eye on, definitely. Okay, now moving on to a subsector of our favorite subject. So the gold price has been marvelous recently. We're firmly above 4,000 again and staying there, and with a little bit of volatility. But relative to digital gold, your Bitcoin, digital tulips, I think we'll call it now. Depends which way you want to go on this. But relative to that, gold is an absolute bastion of stability and value, right? So That's all going fine. We've talked about gold a million times on this podcast. Everyone knows what's going on there. But one thing that you've been saying for ages is that the excitement really starts when silver starts moving. And I think listeners will remember quite how excitable you got when the silver price went through $50. And it's
terribly
got more, hasn't it?
Yeah,
everyone needs a hobby, you know?
True.
Everyone needs a hobby. Some bit tennis, archery, riding. I don't know. But for John, it's watching the silver price.
Yeah, it really is just watching it, because it's one of those things I don't actually own any of. So the last twice that silver's got anywhere near $50 an ounce, it collapsed into a massive bear market shortly after. So that's 1980 and 2011. But this time round, silver's not only got up to 50, it's managed to kind of soar through it quite convincingly. And I think as we speak, it's about 57. And it got up to 58 yesterday or the day before. And it mostly seems to be, the immediate move mostly seems to be down to sort of, because there's been all this talk of tariffs on rare earth metals and other industrial metals, and silver's sort of ended up on that list. There's also been all of this kind of movement of silver out of London, which is the main market where it's traded, onto other markets. So you basically
physically moving out of London.
Physically. Actually, there's been I remember one of our a couple of our colleagues working the commodities desk, and they were writing some very interesting stuff about this, where it actually at one point did become worth people actually flying silver over, because silver isn't normally like. You might charter a flight to fly gold over, because obviously gold, you get a lot of value per pound of gold. Whereas if you're going to charter a flight to fly a load of silver ingots, you're not actually able to put that much weight on the plane. But actually, it was worth doing it kind of recently. But that's all. That's all the kind of technical stuff about silver not quite being where it needs to be. And that's all down to, there is actually kind of jewellery and industrial demand. But there's also added investment demand, so the ETFs need silver to, be located in certain places. But beyond that, it's also the fact that Donald Trump has kind of dropped a very heavy hint that the next Fed chief is going to be a chap called Kevin Hassett. And the market assumption is that he's going to be much more keen on lower interest rates than they've currently got. So he'll be basically an easy money Fed, because gold did bounce too. It's just gold hasn't gone quite as kind of nutty as silver, because basically the market is larger and more liquid. So I think that's where we are.
Partly about silver as a monetary metal.
Oh, definitely, yeah. I think one of the things that, the interesting thing about silver is that, as well as being a very kind of small, kind of fairly, tight market, it's the fact that it's, unlike gold, it is industrial. A lot of it is used in industry. But like gold, it actually has a monetary component, which basically none of the other precious metals do. Russia once tried to make a batch of platinum coins, but they didn't take off. So basically, gold and silver are the only precious metals that have ever been used as money for a prolonged period of time. I think the way I put it the other day in Money Distilled is that their monetary salience has gone up as people have become more concerned about the current global financial system. I think one thing I always think is interesting, if you look at the absolute bottom for gold during the free floating standard, that was in the late 90s, and gold hit rock bottom just about at the same time as the euro was launched. And I think the euro, if you like, is the symbol of a hubristic belief in fiat currency and the ability of governments to essentially, create a single currency that was bolted from all these different nation states. And gold kind of reaching its nadir at that point, I think it's just it's very symbolic of what was going on at the time. And now we've got gold at a record high when, the US dollar standard itself is in doubt because it's kind of fracturing. It's no longer viewed as a politically neutral standard. It's now, you've got to be, the friendlier you are with the US, the more the US dollar system favours you, and vice versa. So basically I think that the monetary salience of gold and silver has gone up, and that's being reflected in the price.
Okay, interesting. That should bring us, I think, briefly onto Bitcoin. I mean, we mentioned it briefly at the beginning, but, it's had a very, very volatile few weeks, right?
Yeah.
And the beginning of this week, down 8%, then back up to pretty much where it was before. And there's a long list of ideas about why it is that it might have gone up. Again, why it is that it went down in the first place, and, gold didn't follow it. And I've been looking through the list of things that people think might have forced Bitcoin down, and it's everything from profit taking. Is it about what used to be called MicroStrategy, now called Strategy, and about the possibility that they might sell some Bitcoin, having always said that they never would, or some of the other treasuries might have to sell some Bitcoin, so supply is more than you thought. Is it about I don't know? And we did a conversation the other day that you will hear on the podcast in a few weeks with that nice man from Saxo Bank about the unexpected things that might happen next year. And one of those was that Q-Day might come earlier than you think. So suddenly quantum computing takes a huge leap forward and all your passwords are completely irrelevant. There's no encryption left, etc. But one of the other things that everyone's talking about at the moment is the yen carry trade, which you and I have talked about before, but now seems to be really beginning to kick off, or rather reversal of. So it's been going on for years. When cheap money flows out of Japan, people use that cheap money to invest or speculate. They make some money, they pay back the debt, they keep the change. Very easy trade, right? Going on forever. But it's based on the assumption that interest rates in Japan remain very, very low, close to zero. And don't forget, that wasn't that long ago that interest rates in Japan were negative. So the trade relies on verging on free money.
Yeah.
And of course, Japanese rates are now going up. A sharp rise in JGB yields, and there's lots of discussion about whether the Bank of Japan will actually raise interest rates this month. So when that happens, suddenly, Albert Edwards, who we had on the podcast a few weeks ago, I know he's a perma-bear, but nonetheless, his phrase
he's a clever one.
He's a clever one.
Yep.
The unwinding of the carry trade could cause a loud sucking noise in U.S. financial assets. And of course, particularly in those that are very heavily leveraged. And a lot of people who buy Bitcoin do it with debt. It's a very heavily leveraged trade in lots of cases. So maybe that has something to do with what happened to Bitcoin. And maybe that was some kind of canary in the coal mine for what happened as Japanese rates continue to go up, what might happen across the board. Albert says if you're going to learn about anything over Christmas, make absolutely sure that it's how the yen carry trade works. Be sure you understand how that fits into the financial system, because you may well need that information.
Yeah, it played a role in 2008.
Absolutely.
Yeah, it definitely is one to kind of keep an eye on, try and wrap your head around.
Well, it's not very complicated. It's like all these things. You can make it as complicated as you like, but it's really, in essence, it's very straightforward. In fact, I think I just explained it in a sentence.
Listen to this podcast a couple of times, you'll be fine.
Yeah, this is not complicated stuff. Although obviously, it might feel complicated as your portfolio collapses if Albert is right. Anyway, at this point, John, you're sorry you don't have silver. You're sorry you don't have as much gold as you like, but quite glad you haven't got Bitcoin, aren't you?
Yes. Like I said, it still needs to fall 95% for me to be in the money, technically, but it's a start.
It is important to remember every time Bitcoin has these volatile moments, as it just did, and you go, look at that, down 8%, down 16%, etc. You've got to remember that in the last 5 years alone, it's still up 400%. So the Bitcoin naysayers, i.e. us, we still look ridiculous.
Oh yeah, and it's collapsed quite a few times, and it has so far always come back. So I must admit,
it's all about the halving, John. It's all about the halving.
Oh, the halvening.
Sorry, the halvening. Halvening. Yeah, that one.
Buy and hodl.
Stop
See,
it.
we know. We're down with the kids. We know our crypto.
We do. Right, we have to stop that. We have to. Thanks for listening to this week's Merryn Talks Money debrief. If you like our show, rate, review and subscribe wherever you listen to podcasts. Also be sure to follow me and John on X or Twitter at MerrynSW and John_Stepek. This episode was produced by Summer Sadi, production support by Moses Andam. Questions and comments on this show and all our shows are always welcome. Our show email is merrynmoney@bloomberg.net.